Hey guys, what's up? Welcome back to another video. In this video, I'm going to be doing an intrinsic value analysis and then also look into the recently reported third quarter earnings results for Chipotle. And as we can see right here, over the last year, Chipotle is down about 23% in the same period that the S&P 500 is down about 19%. So they are underperforming the overall market at the moment. But that being said, over the 5-year chart, we can see that Chipotle is up a whopping 400% in the same period that the S&P 500 is up about 40%. So they're basically 10xing the rest of the market at the moment over the 5-year chart. So in this video, we're just going to look into some of the recent news that's come out about Chipotle after their third quarter earnings result. We're going to look into their financial statements, and then lastly, going to end the video off by comparing them to some of their competitors in the same industry, and then also figuring out the intrinsic value per share for Chipotle so we can know if this is a good buying opportunity to buy into the stock at the current share price. So right here in this article, we can see they're pointing out that over the last quarter, over the last year or so, as a result of inflation, Chipotle has been hiking up their prices, and as a result, that's been leading to a little bit of a slip in the amount of volume they've been experiencing in their stores. So we can see they make 3 points right here. Right here, they point out that same store sales increased about 7.6% year over year. So what that means is basically on an individual store by store basis, the individual stores are increasing their sales by about 7.6% individually as opposed to revenue for the entire company as a whole. And then also in this third point here, they point out that Chipotle raised their prices in August for the third time in the last 15 months. And so obviously a lot of different restaurant and beverage companies are doing this right now. I actually just recently made a video about Coca-Cola, and if anyone saw that video, we saw that Coca-Cola is also raising their prices to try to pass the cost of inflation down to the customers. And so we can see right here that Chipotle points out that they are experiencing a decline in their transactions by about 1%. But that being said, their most popular item, the chicken burrito bowl, is still priced under $9. So that really hasn't changed much. But then also they point out that the reason why they're raising these prices is because of the fact that they're paying more for ingredients. So the cost of their revenues is increasing. And so as a result, they're trying to pass that cost down to customers who are buying their products in the stores or buying their food in the stores. And so right here, we can see their balance sheet for the third quarter of 2022 compared to December 31st, 2021. And over that time period, we can see total assets has increased from about $6.6 billion to about $6.8 billion. And then on top of that, we can see that the majority of their business is financed by liabilities as opposed to equity. They have about $4.4 billion worth of liabilities and about $2.3 billion worth of total shareholders' equity. And of that total shareholders' equity, about 4.6 billion of that is retained earnings. And the reason why the shareholders' equity amount is less than the total retained earnings amount is because of this treasury stock account in their equity section, which is basically a line item that gets higher the more shares a company repurchases. And so the fact that the treasury stock account has increased from about 3.3 billion to 4 billion shows that Chipotle has also not only been increasing their equity as a result of earned capital from their net income from their business, from their income statement, but they've also been returning value to their shareholders by repurchasing shares of their common stock, which is probably one of the reasons why their share price has increased so much over the last 5 years. And so right here on page 4, we have their income statement, and they're comparing their third quarter results for 2022 to the third quarter of 2021. And over that time period, their revenue has actually increased about 13.7% year over year from about $1.9 billion to $2.2 billion in the third quarter of 2022. We can see that due to inflation, their cost of revenues has obviously increased pretty substantially. And that's one of the reasons why they've increased the prices of their own food products to try to keep up with the cost of inflation. And then lastly, with their net income right here, their bottom line, we can see that's increased from about $204 million to $257 million, with their earnings per share after taking into account the diluted common shares outstanding, increasing from about $7.18 per share to $9.20 per share. And so now I want to go to their cash flow statement on page 6 here, and we can see they're comparing their cash flows from the first 3 quarters of 2022 to the first 3 quarters of 2021. And we can see that over that time period, their net cash provided by their operating activities, so those are their day-to-day business operating activities from their stores and the restaurants, has increased from about $843 million to about $921 million. And so that's obviously a pretty good sign to see that not only is their revenue and their net income increasing, but their cash flows from their operating activities is increasing as well. We can also see in their financing activities here that their acquisition of treasury stock account increased from about 300 million to 629 million. And they've also, although they don't really point it out here because they're showing the 3 quarters cash flow statement as opposed to the 3rd quarter cash flow statement, in another part of their report, they pointed out that they repurchased about $106 million worth of shares in the 3rd quarter. And they also have about $412 million worth of shares available to be repurchased at the moment. So that's a ton of value that Chipotle has available to them to return back to shareholders in the event that they wanted to, which has already been authorized by the board of directors. And something else that I didn't point out about Chipotle is that they actually opened 43 new restaurants in the 3rd quarter of 2022, and they anticipate opening another 250 million restaurants in 2023. So that's obviously a pretty big expansion for them. That's one of the reasons that's contributed to this large increase in their revenue, is the fact that they're opening new stores constantly. And so obviously that's something to definitely look forward to for the growth of Chipotle, and something that they have over a lot of their competitors, because a lot of their competitors in this industry, as we'll see right here in the competitor analysis I'm going to do in a second, they obviously focus on franchising their restaurants, whereas for Chipotle, they mainly focus on building out new restaurants. So they own and operate 3,100 restaurants, which is unique because most restaurants usually franchise their restaurants as opposed to owning and operating them. And so right here we have this intrinsic value calculator here, this discounted cash flow model. And we can see that Yahoo Finance right here is estimating that Chipotle is going to grow at a rate of about 27% year over year for the next 5 years. So I was conservative and I cut that value in half to about 13%. They had about $1.5 billion worth of free cash flow in 2021. They have a net debt position of about $2.9 billion on their balance sheet, and they're currently sitting on about 27 million shares outstanding. And so with these metrics in mind, we can see the intrinsic value per share for Chipotle is estimated to be around $1,174 per share, which compared to their current share price means that Chipotle may be trading above their intrinsic value per share at the moment, since they're currently trading at about $1,397 per share. So based on that, obviously, it would seem like Chipotle might not be a good buying opportunity, solely basing it off of these Yahoo Finance estimates. And so right here on the right-hand side, I wanted to do a competitor analysis to see how they rank up against their competitors in the food and beverage industry. And I compared them against McDonald's and Yum brands, which obviously own and operate some of their own restaurant chains and sell food and beverage products themselves. And we can see that Chipotle is not really doing that well in terms of business efficiency, and comparing them to their competitors in terms of financial ratios, they have the lowest gross profit margin, net profit margin, and return on assets of these 3 competitors here. McDonald's obviously having the highest profit margins, and then Yum having the highest return on assets at about 26%. So from a competitor analysis standpoint, it looks like Chipotle is not presenting a good buying opportunity in comparison to some of their competitors like McDonald's and Yum. And then also from an intrinsic value perspective, it looks like they currently may be trading above their intrinsic value per share if you wanted to average about a 10% return on your investment. So from an intrinsic value standpoint and a competitor analysis standpoint, it looks like Chipotle may not be presenting the best buying opportunity right now. But that being said, over the last 5 years, they have completely dominated the market and outperformed almost all of the market, 10xing the return of the S&P 500. So it'll be interesting to see where Chipotle goes from here. Definitely keeping it on my watch list. I have my eye on this stock, but I would love to know what everyone watching this video thinks about Chipotle. Is it a good buying opportunity right now in the stock market? Let me know in the comment section down below. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.